Uh, Trust you are well. I appreciate your participation and I'm grateful for your presence. I anticipated that the webinar will be incredibly beneficial, providing valuable insights for students preparing for the upcoming SBR exam next month. Your expertise will undoubtedly enhance our understanding of the exam perspectives and strengths. You have excellent opportunity to inquire and prepare for the exam. This session will commence shortly. When you have a questions, please unmute yourself and proceed to ask. Uh, Okay, thank you, sir. With your permission, let commence the webinar, sir. The floor is yours. Let's start the floor.
Okay, thank you very, very much indeed. Namaste, everybody. I hope you can all see the group chat. Look, this is very much for me a opportunity to allow you to interact with me and ask questions. I have got some little bits of teaching or some little kind of standard things that I can kind of run through. But fundamentally, I'm here to help you and to answer your questions. Now, what I often do at the beginning of these things is to just kind of absolutely make sure that everybody knows we're talking about the same thing. Group accounts comes up, pre-populated spreadsheet, ethics comes up, nice easy marks. Standards comes up, and you get 2 professional marks in ethics and you get 2 professional marks in your question 4, which has an investor focus. Can I ask you a direct question to which I would like a simple answer in the group chat? Which question are you planning on doing first? Which question are you planning on doing first? Please use the chat box. Yul says question number 1. Yeah, most people will do question number 1 first. Anybody else got a strategy? Anybody else? And she loves the group accounts. Kripa loves the group accounts as well. Question 1. Who else is there? Yeah, Sonny. Okay, question 1. Okay. Now, I'm asking you a question here. Thank you, Milan. I'm asking you a question here for which there isn't a right or wrong answer. I'm not trying to trick you out. I'm simply saying it's a question you should ask yourself. And time management is a real enemy in this exam. And from marking scripts and from understanding how marginal students have performed, they run out of time. And it looks like question 1 is often done first, done really quite well, and then question 4 is left altogether. I put it to you, the question 2 on ethics is a relatively known quantity, and that question 2 on ethics might be something that you want to think about as doing as your first question, so you manage your time better, so you don't overrun. You're an adult, you're an independent learner, yeah? You've done professional exams before, or you've done academic exams before. You know, this is not the first exam you've ever sat, all right? So you kind of know yourself, and you know that time management is very, very important. So that's certainly something that I'm going to just put out there very, very briefly. Before I go on to my next little part, does anybody have any particular topics or questions that they would like to ask me? This is basically an open opportunity. You can come off mute. You can tap in the group chat. I don't mind. Or you can be quiet, and in 30 seconds or so, I will continue on with some other stuff. Let me continue on with some other stuff. I thought I had it setting to unmute themselves. 𝐸𝐧𝐽, your co-host, you can also put the setting to unmute themselves.
Hello there, sir. Can you hear
Please.
me?
Yeah, far away.
Greetings from my side, from Nepal. Thanks for this opportunity.
No problems.
I've got a few questions here.
Okay, one at a time. Let's break it down, do one at a time. So what's your number one question? What's your first question? What's your most important question?
Yeah, my number one question would be from IAS 27 separate financial statements. I know this is not a syllabus area where like questions come frequently, but I was curious about this particular standard and wanted to know about this more. Can you like briefly summarize this standard for me?
You're working backwards from a accounting standard number and name, and I don't normally work that way. So I don't have a simple summary of what that standard says because I teach group accounts as a topic. So I'm being straight with you. Yeah, we don't need to know the particular accounting reference standards stuff. What was it that you don't understand, or what was it that you're uncomfortable with in relation to group accounts? I mean, an individual parent company needs to record the investment at fair value, needs to look at the debt. You need to understand the definition of a subsidiary. What aspect of group accounts are you not comfortable with? You can find a summary of the accounting standard very easily by going on ISA Plus. If you just
I did do that, so yeah.
But what is it? What is it about the topic of group accounts that you're not as sharp on as you would like?
As I was reading this standard in IAS websites, I got a little bit confused because like there were three different things regarding this. One is individual statements that company make, another is consolidated statement, and another is separate financial statements. I was concerned, what's the difference between the individual statements and the separate financial statements?
It's never going to come up. Irrelevant. So, you're going to be given group accounts. You're going to be given a pre-populated spreadsheet. And from that, you're going to have to adjust. Don't go down that alleyway, my friend. I'm not going to give oxygen to the question. I'm talking to you straight. Yeah. You know, you've got an exam coming up. You want to pass the exam. This isn't coming up. Move on.
All right. So
no
can
problem.
I move on to the next question?
Yes, certainly. By all means.
Another of my question is from financial liabilities. In financial liabilities, if we measure the liability from fair value to PL, then we need to split the fair value into different aspects, right? Credit risks from their own side, from the own side of the entity, and from other credit exchanges. Can you understand?
Okay, so let me recap on that area, and then I will move on to some of the little stuff that I've got prepared. So the question you're asking is about financial instruments. The question you're asking is about liabilities. Now, the majority of liabilities and the default accounting classification and treatment for liabilities is amortized cost. However, there are certain very limited circumstances, perhaps where the fair value option is being exercised, or in other words, the liability is being used to finance an asset which is at fair value, or the liability is one that's being held for trading. So there are very limited circumstances where the liability is classified as fair value through P&L. Now, you would have thought normally that if it's called fair value through P&L, what that means is that at the year end, it's restated to fair value, and the gain or loss between the difference between the carrying value and the fair value is taken to the profit and loss. However, when a financial liability is classified as fair value through P&L, not always does all of the gain or loss go to the P&L. Now, let me just pause for a minute here. Have I summarized the situation that relates to your question?
Yeah, more or less
Okay.
it's summarized there.
Okay. So when so there's two answers to your question. One is this is the answer, and the other is why is the answer. All right. So let me tell you the answer first of all. Where the change in the fair value of a financial liability classified at fair value through P&L, where that change is attributable to the change in the credit risk of the entity, the gain or loss goes to equity. The gain or loss goes to OCI. The gain or loss does not go through the P&L. That is the rule. Would you ever have to calculate that difference? No. The worst that could happen is you're told the gain is 10, and of that, 6 is one and 4 is the other. That's the worst that could happen. So you're never going to have to calculate that. It's a market thing. It's not there. So that is the technical answer. And therefore, you like that or lump it. 2 + 2 = 4. It always does. And financial liabilities classified at fair value through P&L are unusual. And when there's a change in the fair value, if that fair value is attributable to a change in the credit risk, then it goes to OCI. That's it. Goes to equity. That's it. So that's the standard. That's what the standard says. Would you like to know why the standard says that?
Yes, I would like to know that. So
Okay, so potentially this can be explained as to why this is going to occur. Now, if we're going to understand why, I need to take you away from financial liabilities and I need to put you back into financial assets. I am going to lend money to somebody. Let's call that person James. So I'm going to lend money to James, and I'm going to lend James 100 million. Okay. Now, I have a financial asset. So I'm talking about me, first of all. If it becomes apparent that James is an alcoholic, a gambler, somebody who's run up a lot of debts, then I have lent them 100 million. It looks like a few years' time that they're not going to be able to pay me back because they've got into financial difficulty. From my perspective, with a financial asset, I can't sell my asset for 100 because everybody knows that James is unreliable and is likely to default. His credit risk has gone up. So first of all, you have to be happy that if I have an asset at fair value, the fair value of my loan is going to come down. So actually, if I wanted to sell it on to someone else, because James is a high credit risk, I could probably only sell it for 80 or 60. I'm incurring a loss of 20 or 40. Are you happy with that side of it?
yes, I understand.
Right. So now we flip and we are James. James has borrowed 100 million. James has a liability of 100 million. James is measuring the fair value of that James is measuring that at fair value. James has got into financial difficulty. It probably can't pay it back. So the market value of that is falling to 80 or falling to 60. Now that gives James a gain of 20 or 40. It would be utterly, utterly ridiculous to put the gain through the P&L. That is not a distributable profit. That is not a trading profit. That is not an operating profit. That is a quirk that the liability has come down because of the credit risk. We simply don't want to confuse users by putting such rubbish through the P&L. It's low quality, unrecurring, it's rubbish. Therefore, it is taken to equity. That's the reason, because you don't want to have gains from your deterioration in your own credit risk going through P&L. Bananas. Right. Happy with that answer?
Yes, sir. Yes, sir.
Excellent. Right. I'm going to move on. I'm going to do a little bit of my thing. All right. And we'll come back and have another. That's fine. That's no problem. We'll have another question in a minute. I've been reading the examiner's reports. And he is upset that when it comes to the pre-populated spreadsheet, some people don't put the numbers in the correct way. What is the new gross profit? Spend a moment reading the question. The parent has sold goods to the sub for 10 million, and there's a provision for unrealized profit required of 1 million. And there's going to be an adjustment for the intercompany sales. There's going to be adjustment for the PUP. You don't really need a calculator for this. How much is the revised gross profit? If you could put in a number that has 3 digits into the group chat, I will be very grateful. This is exactly the sort of thing that can come up in the exam. This is question 1. This is groups. This is the one that you all love and you want to do first. The question is written in capitals. What is the new gross profit? What is the new gross profit? Thank you, Saresti. 149 is the first answer that we have being suggested. That was quick. I like quick. If you're going to make a mistake and get it wrong, the best thing to do is to make a quick mistake. What you don't want to have is a long lingering death. You know, if you're going to die today, let's please die quickly. So what is the new gross profit? I have got one answer only. There are 15 of you, 16 of you on the call. And if everybody gives me the right answer, then I'm much more confident about banging through this quickly. If lots of people are not answering or hesitant, then I end up going a little bit more slowly. Nikki says 149. Thank you very much. Milan says maybe 151. Okay, interesting. All right, so we've already got some diversity of opinion. Love it. Navaraj says 151. Okay, so we've got a split. We've got a split between 149, 151, and I'm sitting on the fence. I'm not quite sure what's going on. I'm going to count to 5 seconds in my head, and then I'll begin an explanation. I think there's possibly 2 marks here, maybe 3 marks available for getting this answer right. The first thing to say is the parent has sold to the sub, and therefore what you've got to do is to eliminate 10 against the revenue. So the ultimate group revenue is now 390. What you've also got to do is to reduce your cost of sales. Because if the parent has sold goods to the sub has bought goods from the parent. And therefore we've got to reduce the cost of sales. That means I want it to be 240. I want the cost of sales to be 240, which means that I add 10 in order to make it minus 240. So you're debiting the revenue, you're crediting the cost of sales. But in an exam context, it's a pre-populated spreadsheet. So you're not doing debits and credits, you're doing pluses and minuses. You reduce the revenue by making it minus 10, but you actually reduce the cost of sales by making it plus 10. By eliminating the sale and the purchase, you don't affect the gross profit at all. We've got a further adjustment to make for the provision for unrealized profit. You're eliminating profit. You're eliminating profit. You're making profit go down. To make profit go down, yeah, you've got to make your cost of sales go up. the unrealized profit is reducing the closing stock. Instead of the closing stock being a high number, it's a slightly smaller number. Cost of sales is going up. Cost of sales is going up. And if cost of sales is going up, to reduce the profit, you minus. So gross profit is 149. To me, that's relatively intuitive. The intercompany sale is being eliminated against the sale and the cost of sale. And Bastana, welcome. Fantastic. Good to have you on board. So the gross profit there is 149. So what you would be presenting in the exam, that's what you would present in the exam. That is the full answer in an exam scenario. In an exam scenario for question 1 on the pre-populated spreadsheet, you do not aggregate the numbers because it takes you a few seconds to do so. It takes you a minute to do so. And there are 0 marks available for adding up the final column. So don't add up the final column, please. Don't add up the final column, please. Yeah, your answer, your marker is looking for the -10 on the revenue, the +10 on the cost of sales, and the -1 on the cost of sales, and keep it in a separate column. Don't say it's +9. Marker won't know where +9 comes from. It's 10 and it's -1. Keep it separate. I'm about to move on. Are there any questions on that particular point? Because really, you want to smash this. This is what you need to be getting absolutely right. The basics. To reduce the cost of sale, yeah, you plus. Okay. Right. This is a more sophisticated example. This is going to test a little bit of your comprehension. And I'm going to show you an answer which I'm comfortable with. And I want you to be reading this question. The parent has bought 100% of the sub, paid 100 million. The net assets are 80 million. Goodwill is 20. Absolutely fine. Yeah, you don't need a calculator for that. Now, the sub has developed its own brand. And in the sub's individual accounts, has a carrying value of 0. This brand could be sold for 5 million to competitors, but the parent company isn't going to do that because the parent company is going to discontinue the brand. In arriving at the $80 million, in arriving at the fair value of the net assets at $80 million, whoever did that didn't include the brand. So the brand was not part of the 80 million. Now, the question is for 5 marks. Discuss. Discuss the accounting treatment of the brand in the accounts of the sub and by the group accounts. That's the question that you are reading. That's the sort of thing that comes up in the exam. In the accounts of the sub, have they got it correct? Yes or no? Has the individual, so in answering this question, there's 2 parts to it. What does the sub do? What does the group do? And, you know, we've been told that, you know, the individual company has ignored it. Is that the right thing to do? In the accounts of the sub, have they got it correct? Yes or no? Nikki says, yes, they've got it correct. Most of you have said, yes, they've got it correct. And I think the subsidiary has got it correct, because I remember correct. The internally generated brands cannot be recognized. Internally generated brands cannot be recognized. Now that is found within ISA 38, but in order to earn the marks, you do not need to, in any way, shape or form, quote IAS 38. You don't need to know the name or the number. So 1 mark would be awarded if you wrote that sentence. Subsidiary is correct not to recognize its own brand, prohibited per the standard. Yeah. Or, subsidiary is correct not to recognize the internally generated brand. This is prohibited by the standard. 1 mark. The group, though. Yeah. The word "and" is used. And by the group on acquisition. Is the group correct? Because what the group has done is to ignore. Sorry, is the group correct? Anju says no. Sufaksha says no. Rohan says no. So the group is incorrect. Yeah, because you can't go around just simply agreeing with questions all the time. Otherwise, it's not appropriate. So the answer is, I think the next answer is, in the group accounts, the brand should have been recognized. So the accounting treatment is indeed incorrect per the question. In the group accounts, the brand should have been recognized. Why? Because it's an identifiable asset of the sub, and therefore we recognize it as a consolidation adjustment. So I've not only said that it should be recognized, I've said why it should be recognized, because it is an identifiable asset of the sub. The sub may not recognize it, but that doesn't stop us recognizing it in the group accounts. How many marks do you think I've earned already out of 5? How many marks do you think I have already earned out of 5? 2. Yeah, 2. I agree with you, 2. I don't think 3. This is not a pass. You're not going to pass if that's all you're going to write. Yeah? You need to write a little bit more. What's a buzzword? What might you write next? What are we going to have to get involved in? Yeah? Can you give me something? Thank you. Thank you. The sub, the parent, the consolidation is going to have to recognize it's not so much about the criteria of recognizing the intangible asset. It's because under ISA 38, you're not recognizing the intangible asset. It doesn't meet the criteria. We've covered that already. It's about that in the group accounts, it's a fair value. So in the group accounts, we identify we are recognizing it because we have a fair value. Now, the definition of fair value is the amount for which you would expect to receive on the sale of an asset in an orderly transaction between informed and willing parties. Too much. Yeah. Fair value is market value. If you can pick up a sentence about fair value, you should pick up a mark. And fair value is what you can sell the asset for. How much can we sell this asset for? How much can we sell this asset for? Yeah, we can sell it for 5 million. The parent, the group is wrong. The fair value of this asset is 5. If the fair value of this asset is 5, we should have included it at net assets at the date of acquisition. So what figure is the goodwill? What figure is the goodwill? Because if you change the net asset figure, you change the goodwill figure. What figure is the goodwill? Yeah, brilliant. Brilliant. Absolutely brilliant. Yeah, 15. Yeah, goodwill is 15. You don't need a spreadsheet. You don't need to do anything complicated. You can earn a mark by saying this means that goodwill is actually 15 million. How many marks have we earned so far? 4. Yeah, absolutely. Because funnily enough, we've said 4 things. If you get 4 out of 5, 8 out of 10, 4 out of 5, 8 out of 10, you will get 80% in the exam. That's a pass. That's a pass. I'm a tutor. How am I going to get the 5th mark? What's the fancy thing? Can anybody suggest anything that would happen next? Can anybody give me a buzzword or a consequence? We're discussing the accounting treatment of the brand in the group accounts. We've recognized it as an asset of 5 million. We are including the brand in the group balance sheet as an asset of 5 million because it has a fair value of that at the date of acquisition. But I'm not 100% comfortable with that. What are we going to do with this brand? Are we going to sell it? Oh, Pritak, thank you. Well, if we amortize it, but you'd amortize it only if you are recognizing future revenue against it. This is an asset that we're going to throw away. We're going to lock it in a cupboard. We're putting it to a different use. It has no recoverable amount because we're not going to sell it, and we're not going to sell the brand, and we're not going to produce goods using the brand. So it's written off against the post-acquisition profits. At the date of acquisition, it had a fair value. Afterwards, it doesn't. 5 marks available because we've said 5 things. That is worth 5 marks. Too often, students write too much. They write, the definition of impairment as defined by the standard ISA 36 is that an asset is impaired when the carrying value it's like no one wants to read that. Be direct. Be succinct. Now, numbers. In a pre-populated group statement of financial position, they've got goodwill in there at 20. So the adjustment that you would be making would be to take 5 away from the goodwill, but you'd be adding 5 to the brand. You're robbing Peter to pay Paul. You would be minusing 5 against the asset, but then the brand would come in. But then when you do the impairment review on the brand, you've got to write the brand away by 5 because you can't going forward really have that brand. And then in that the write-off is through the P&L and therefore affects the retained earnings. 5 marks. And then you've got the marks on the pre-populated spreadsheet. I am pausing for a moment. This is a classic exam scenario. It involves a little bit of group accounts, a little bit of ISA 38, a little bit of IFRS 13, but it's application, application, application. It's not about the regurgitation of definitions. Right. Questions. I have been talking and talking, and maybe we should go back to I've got some more stuff that we can talk to. I've got some more stuff that I can run with you. But part of today, we're looking to go for an hour. Part of today is about listening to your questions. So we've already had one student come forward with a couple of questions. Perhaps another student would like to come forward with any questions they have, and they can choose to do so either by using the chat box or taking themselves off mute. This session is not going to go on forever. I've got some other little bits to do, and there'll be an opportunity for a third and final opportunity at the end. But if you do have a question that you want to ask me, now is the time. Okay, let me run through some quick exam tips then. All right, quick exam tips, perhaps the emphasis on the word quick. I think there are potentially two reasons why students fail the exam. Yeah. One is they don't have enough knowledge. They're short on knowledge. Two, they're short on time to apply that knowledge. All right. Now, nobody has perfect knowledge and nobody has perfect time management, exam technique. They can always both be improved. Here we are a month away from the exam. I think the thing that you should be working on the most is your time management. Because up until now, you've been like a sponge, taking information in, right? Now, in the exam, it's all about getting the information out. And that's what you've got to practice. Yeah, getting it out to time. Knowledge is overrated. Perfection is overrated. Okay. So knowledge can be a limiting factor, but as we enter, the closer we get to the exam, the less it is about how much you know, and the more it is about what you know, how quickly you can get it out. When you think about your knowledge, I was very impressed with the technical detail of the question I was asked earlier about the accounting treatment of a financial liability at fair value through P&L and the credit risks. Now, the person who asked that question and the knowledge of answering that question was not a pass or fail issue. The knowledge level there was somebody who potentially could be getting 80%. That's a very technical question to be asking. Massive respect, brilliant, but you don't need more and more and more and more knowledge when you've already got that level of knowledge to be able to ask the question. Yeah, there's no point in being brilliant with the knowledge if you can't apply it in the time allowed. And there's no point in having brilliant knowledge about financial instruments, but knowing nothing about investment property or knowing nothing about government grants. You need to have a revision note. You need to have something at your fingertips on every single accounting standard. If I said to you segmental reporting, what buzzword, what phrase, what percentage would you write down in the chat? If I said to you segmental reporting, yeah, I am writing things down in the chat myself. What are you writing down? You've got to have something at your fingertips on every single accounting standard. Yeah, you saw in that 5 marker 2-3 different accounting standards coming up at the same time. If it's segmental reporting, 10%, 10%, 10%, 10% of the revenue, 10% of the profit, 10% of the assets. That's the criteria, 75% of the overall revenue. Yeah. And a definition of a segment is that it has to be reviewed by the chief operating decision maker. Anyway, breadth is better than depth. Make sure you know something about every single standard. Do not beat yourself up if you haven't got perfect knowledge. You want to pass this exam, that takes 50%. Nobody gets 100% in the exam. I have a podcast. You may be familiar with my podcast. It's widely available on Apple, widely available on Spotify. It's widely available on Google. It's widely available. If you want to access the podcast, just use your QR code and you will jump straight to that podcast. It's very easy to find. It's a free resource. Yeah, go and enjoy, yeah, my podcast. I've got another exercise for you. I've got another exercise for you. Explain how auto should assess whether the goodwill of trailer is impaired in accordance with ISA 36. Again, no calculations are required. That is the requirement. This is my answer. This is my answer. Explain how auto should assess whether the goodwill of trailer is impaired in accordance with ISA 36. Indicators that trigger an impairment review include when the asset is damaged or when interest rates rise. Impairment losses on assets that have been revalued are charged to equity until the reserve is exhausted, then they're charged to P&L. Impairment losses will reduce the carrying value of the asset, but with no instant tax relief, they don't affect the tax base. Therefore, they create a deductible temporary difference. Impairment losses are a non-cash expense. They're charged against profit, and in the cash flow, basically, they're added back. Please spend 5 seconds, 10 seconds reading the requirement and looking at my answer. My answer. I love this answer. I've said 4 things. I've written an answer of an appropriate length. I've used white space. It's broken down. It's easy to read. How many marks would you give it? You be the marker. How many marks are you going to give my answer out of 5? How many marks, please? Tell me. Oh, somebody doesn't like me. Navraj. Oh, you're giving me 0 marks? RT is going to give me 3. Thank you, RT. And she's going to give me 4. Wow, that's generous. Nihal's going to give me 4. Okay. Bless you. Bless you. Any more? For any more? My nephew lives around the corner from me, and he's got a little baby boy called Joshua, who is 2 years old. And I went to see him the other day, and his dad, my nephew, had said, look, Joshua is talking. He's learning to talk now. He's great. So I said to Joshua, I said, how old are you? I said, how old are you? And he said, my name is Joshua. So how many marks should I give him? Because he didn't answer the question I was asking him, did he? Look at the first sentence. Indicators that trigger an impairment review include when the asset is damaged. What asset are we talking about here? What asset are we talking about here? We're talking about goodwill. Do we need an indicator of impairment to do an impairment review on goodwill, or is goodwill subject to an annual impairment review? So that first sentence is technically correct, but it's not answering the question. No marks. Second sentence, second paragraph. Impairment losses on assets that have been revalued are charged to equity. True. Until the reserve has been exhausted. True. Then it's charged to the P&L. True. Can you revalue goodwill? Can you revalue goodwill? No. So absolutely irrelevant to auto and trailer. Impairment losses on goodwill are ignored for deferred taxation purposes. Goodwill is ignored for deferred tax altogether. It's an exception. It's an exception. There's no indication that deferred tax needs to be discussed. And in any event, goodwill is exempt from deferred tax. You don't get temporary differences. The last sentence, maybe just, the last sentence, but I'm struggling. I think this answer is really poor. It's technically correct. It's well written, but it's not ATQ. It's not answering the question. We need, in the exam, to think apples. Application, application, application. Not regurgitation, but application. Yeah? Application, application, application. This, to me, is a better answer. That how should they assess whether the goodwill should be impaired? Goodwill is impaired. The goodwill has to be assessed on an annual basis, whether you like it or not. So having a sentence that includes the word annual would be good. Referencing the fact that it's a P&L expense, not anything to do with equity. Talking about the recoverable amount, because if you're doing an impairment review, the recoverable amount of goodwill is a problem because you can't sell goodwill on its own, and goodwill on its own doesn't generate any cash. So what's the next jargon? What's the next buzzword? If I'm talking about the impairment review of goodwill, what 3-letter phrase am I going to be? Thank you, Tanzing. Thank you, Tanzing. Yeah, I need to bring in CGU. You've got to have little things at your fingertips. Impairment review of goodwill, you've got to instantly think about goodwill. Maybe think about NCI, whether NCI is measured as a proportion of net assets or in full. You could construct a little sentence around some of these ideas and make sure that you include the word auto. Yeah, auto will need to do an annual impairment review on the goodwill of trailer. And then you've shown some application. Yeah, any impairment loss will be charged in the group profit and loss account, full stop. Yeah. Does that make sense? So I'm a big fan of time management. You start the exam you need really to be very, very, very aggressive. How long have you got? If it's a 5-mark question, how long have you got? How long should you spend answering a 5-mark question? Five marks, yeah, 8 minutes, 9 minutes. Yeah. And you should try and say 5 things. Although, can I say this to you? As someone who writes an answer, I'll always try and say 5 things because I believe it's 1 mark per valid point. But if it's 5 marks and you say 4 things, you're going to pass. You know, even if one of them's wrong, you're still going to pass. So yeah, 8, 9 minutes. Yeah, I'm comfortable with that. Anyone who said 8 minutes, 9 minutes, 10 minutes, absolutely fine. Don't think that you've got 45 minutes to do a 25-mark question, because the requirement is never for 25 marks. It's for 5 marks, 8 marks, 10 marks. Break it down. Keep moving, keep moving, keep moving, keep moving. 10 marks, 18 minutes, so on and so forth. Read the question in order to answer the question. Make sure that you are not getting excited. Yeah, think 1 mark at a time. When you think you've earned a mark, tab on. Yeah, in other words, use white space. You can start with a definition, but try and soften it. But it's mostly about application, and then you reach your conclusion. Even if you come to the wrong conclusion, it's still possible to earn marks. Yeah. So it's not binary that the answer is right or wrong. It's about your debate and your conclusion and your observation. We've talked about this. A lot of you are going to be doing question 1 first. I've tried to suggest some of you might be thinking about doing question 2 first. There is, yes, you can use abbreviations in the answer. I mean, if you're explaining to an investor about segmental reporting and you put in your answer CODM, that's not really explaining to an investor, because an investor wouldn't understand the abbreviation CODM, yeah, Chief Operating Decision Maker. So use abbreviations selectively. I think everybody should know FV, and everybody should know GWILL. This is not a spelling test. Yeah, but you shouldn't be writing in text speak. Please do the mock. There's a pre-mock coming up. I've been involved in that pre-mock, and you should do the pre-mock, and there will be a video launched on YouTube of the answers of that pre-mock. So the pre-mock is very important to do, and I would ask you really to do that, and to do it to time on the ACCA practice platform. When you reach the end of it and you press the end, you can then mark it and find the answer, and just by right-clicking on it, you can save the answer. All right, so the answers are available. The printed answer to that is available. Oh, Anshu, would you like to give any tips on related issues? Yes, I would. Yeah, current issues. Okay, I'm glad that you asked about current issues. What's the latest exposure draft? How many exposure drafts are there on the list of examinable documents? There are no exposure drafts listed as examinable documents. And because there are no exposure drafts listed as examinable documents, you can argue that there are no current issues. What there is in question 4 is an investor focus. so that you're explaining to investors things which could involve things like cryptocurrencies, could involve things like COVID, could involve things like that, which are sort of loosely current issues. But I think we want to reframe ourselves away from talking about current issues to more thinking about how we are advising investors. So there are no current issues. What there are is investor focus. Is it necessary to specify a particular accounting standard? No. Can we write in accordance with the relevant standard? Yes. Absolutely, Rohan. Trust yourself. Trust yourself. There are no marks in the marking guide for remembering the name or number of the accounting standard. When you passed your driving test, you would have had a lesson beforehand. You would have done a practice mock. If you have ever acted in a play, you would have done a dress rehearsal. So you do mock exams. I've never been to this place. Does anybody know where it is? Does anybody know where that football stadium is? I've never been there. No, it's not Manchester. It's not Manchester. It's not Manchester. I'll talk about profession. It's Anfield. It's Liverpool. When Liverpool play at home, they normally win. Because they know the changing rooms. They know the crowd. They know the pitch. They know they're at home and they're confident because they're at home. Practice your mocks on the ACCA practice platform, because that's how you're going to have to do the real exam. Make the ACCA practice platform your Anfield, your Old Trafford, your home ground. Yeah. If you're doing the exam in the morning, do your mocks in the morning. If you're doing the exam in the afternoon, do your mocks in the afternoon. Yeah. Do your mocks at a time and a place that you're going to be quiet and undisturbed, and do it in one go. Do the pre-mock closed book. Don't, replicate it. Yeah. During the tour, during the warm-up season, they don't play matches of 20 minutes long. They play them 90 minutes long with a half. They do it in the right way. Yeah. And make sure you review your answers, and you're not going to get the same answer as the model answer. It's not the objective of the exercise. You want to pass the exam. Yeah. Not get 100%. How to achieve professional marks. In SBR, professional marks are relatively unimportant. In other strategic professional exams, they are, 20 marks. There's only 4 marks available for professional marks in SBR. Question 2, 2 marks. In the ethics, by linking things to the ethical principles, and by providing a complete, coherent answer that you would look to hand in. That's how you earn professional marks, by having a rounded answer, a considered answer, not bullet points. Yeah. Yeah. One that considers it, So yeah, it's much, much less important than the other strategic professional exams. Last slide. Last chance. Talk to me, people. Talk to me, people. Do you have any further questions? You can either come off mute, or you can tap away in the chat. Yeah, you must copy the requirements into the word response area. That's what I do. I've got a YouTube channel. You can see me doing that. So you control, copy, paste the requirement into the word response area. It means that you then have to reformat the answer in the word response area, but it's worth it because you can then close off the window for the requirement and you never have to open up that window again. and then don't bother deleting it. It's simply there. Anshu, yeah. Other than ethics, can we use 1 mark per 1 point rule? Yeah, absolutely. I mean, that is just generally, you know, if I was marking, you know, if I was writing a marking guide, that's where you start from. There's no half marks and there's no 2 marks. You don't get you don't get 2 marks for a conclusion or 2 marks for this or that. Everything really is 1 mark, 1 mark, 1 mark, 1 mark. I mean, what I try and do is challenge the marker to say, give this a mark. I mean, I don't write my answers in the way that the examining team do. I write my answers as I want my students to present their answers in the exam. And if I'm a marker, I want to be giving 1 mark, 1 mark, 1 mark, 1 mark. And if you've got a couple of short, sharp sentences in a mini paragraph, and then there's a space, you look at that mini paragraph. If it contains a buzzword, yeah, and it's wrapped around a sentence, move on, next one. You know, if you've got a solid block of writing, it gives you a headache. If you've got a solid block of writing, it just gives you a headache. Harder to mark. So you challenge the marker. You make friends with the marker by using mini paragraphs. And you try and judge to yourself, that mini paragraph is worth a mark, so I move on to the next one. And you try and think of the next point. How did the company deal with it? How should the group deal with it? Yeah, what's the impact on the fair value? What's the impact on goodwill? Needs to be impaired. Neha, listen to my podcast and you'll find what I discuss. There's 30, 40 editions of it. They're all fairly short. Some of them are technical on financial instruments. Some of them I interview other people. Will we still get marks if our answers are completely? Yes, Rohan, you will. Yes, Rohan, you will. Yeah. You need to be answering the question. I say yes in a rather aggressive way. In strategic business leader, absolutely. But let me tell you that nobody produces an answer that is of the length and depth of the examining team. The spreadsheet, there's no real room for negotiation. It's either right or wrong. So you've got to, that's valid. But your answers will be different from the suggested answers. Yes, they will be. Doesn't stop you earning marks though. I think so. I haven't got you on mute.
I was wondering something, sir.
Yeah, far away.
From the exam perspective, how important do you think the sustainability issues are for SPR? Are they as important as ethics, or how much do we have to focus on sustainability?
So effectively, you're asking me to tip. What do I think is coming up in your exam?
Not really. I was just wondering.
No. I'm not. I'm teasing you rather than. I will answer your question.
Yes, thank you.
I will give you the correct answer to the question after the exam. Because if it's there in the exam, it's massive. I mean, it's not there in the exam, it's irrelevant. And I don't know whether it's going to be in the exam or not. What I do know is it's on the syllabus.
Right.
What I do know is that it's a compulsory exam and you need to know something about it. So when it comes up, you've got something to say. So I've got a couple of podcasts on it. It's
all right. I'll check it out.
It's something which is worth knowing about, but some of you will do the exam in the morning and some of you will do the exam in the afternoon, and you'll do different exams. So if sustainability comes up it may not come up for all of you. It may only come up for some of you. So in the last exam, for example, some people had cash flow as question 1, and some people had a balance sheet at question 1. So it's very difficult for me to tip or to know something about alternative performance measure. Yeah, sure. EBITDA is an alternative performance measure. Alternative performance measures have a good heart. They come from a good place. They're there because management want to try and convey something about their business model that is unique, that gives the investor a deeper insight. So if you're running an airline business, airlines will publish key performance indicators around their capacity, their seating capacity, because that's what's key to their business. You know, how many people are on their flights. So generally speaking, they're good, or they come from a good place, but they're not in accordance with accounting standards, and therefore they run a risk of confusing investors, because, you know, why do we have yet another measure of profit? Why do we have yet another measure of gearing? What's the ingredient? So you would need to properly disclose in the accounts all sorts of clarifications and justifications around it. So yeah, I think I've done a podcast on alternative performance measures as well. I think I've been going for over an hour. My golden rule is to try and stop after an hour. I wish you well. I wish you all well. You can find me on LinkedIn. You can find me on YouTube. Yeah, so if you go on LinkedIn, you'll find me on LinkedIn, and you'll find me on YouTube. And there are additional resources out there. Look, I wish you all the very, very best. All right.
Yeah, I assume they have all received the response to the questions, Tom.
Good. Good.
Okay. Thank you, everyone. This exceeded my expectation, actually, and the participant was incredibly active. So
Thank
it
you.
was a pleasure to witness the resonance and vividness of each word, sir. So I hope you all find it valuable and helpful for the examination. Best of luck, everyone. And Tom, sir, sincere thanks for your consistent time and support. I'm grateful for your dedication to the student. Thank you so much, sir. Thank you
so much. Namaste, everybody. Namaste.
Namaste, sir. Thank you. Have a good day, sir.
Thank you. God bless.